Good morning, everyone, and thank you very much for joining me. This is the morning market review with myself, Russell Shaw, Senior Market Specialist at FXCM. My email address, rshaw@fxcm.com. Today is Thursday, the 31st of March 2022, and just want to remind everyone that we do have the live trades tomorrow, the live NFP trade. So I'll put that link in the chat in a moment. Just want to bring up our disclaimer. So the first disclaimer is the high risk investment warning. I'll keep this on screen for a few moments. And whilst I have that on screen, what I'll do is I'll put the link in the chat. So all right. So if you want to join us tomorrow, just go ahead and register, and happy to have you on the webinar. Just bringing up our market commentaries disclaimer. I'll keep this on screen for a few moments as well. Hey Raj, good morning to you. Nice to have you on the webinar. Nice to have everyone on the webinar as this morning. And I just want to bring up our references: FXCM Markets 2.0, CNBC.com. We may look at tradingview.com, but I think just to kick us off, let's go through the CNBC note, and then we'll take a look at some of the charts. So this is from the CNBC. We're looking specifically at the article on the European markets, and the headline reads as follows: European stocks head for a higher open after a tumultuous month for markets. And the article reads as follows: European stocks are expected to open higher on the last trading day of March, a month marked by global geopolitical and economic uncertainty after Russia's invasion of Ukraine. Geopolitical uncertainty and concerns over rising inflation have dominated market sentiment in March. Both European and US markets traded lower Wednesday, following disappointment after talks between Russia and Ukraine aimed at finding a solution to the conflict again appear to be making little progress. Russia said Tuesday it would reduce its military presence in some parts of Ukraine, but several countries, including the US and UK, remain skeptical over Moscow's pledge, and Russian attacks on Ukraine continued Wednesday. Oil prices are also casting a shadow over sentiment. US crude prices climbed more than 3% on Wednesday as Germany warned of potential rationing of natural gas due to disputes with Russia, and US crude stockpiles fell. Oil prices fell sharply during Asia trading hours overnight. However, with international benchmark Brent crude futures falling 4.82% to $107 per barrel, and US crude futures dropped to $101 per barrel. US President Joe Biden's administration is considering a plan to release 1 million barrels of oil per day from the strategic petroleum reserves for about 6 months. A source told NBC News global oil prices have sparked in volatile trade since Russia invaded Ukraine more than a month ago. Just got two more paragraphs here, guys. Globally, US stock futures were slightly higher in overnight trading Wednesday, ahead of the last trading day of the month and the quarter. Investors stateside are awaiting weekly jobless claims and personal income and spending data to be released Thursday morning. In Asia Pacific markets, overnight shares were mixed. Upcoming data releases include fourth quarter UK GDP, which I think would probably be out by now, a Euro area unemployment rate for February. NATO is set to release the military alliance's annual report, and OPEC and non-OPEC allies, including Russia, will hold a ministerial meeting. All right. I think a good place for us to start would be with the gold chart. Let's bring up the gold chart, and we'll start from there. All right, so we're looking at the gold weekly now. Let's take this off and this off. All right, so first things is that there is an uptrend here, high followed by a higher peak. Just take a look at candles 1 and 2. I think they are very telling in that they're sort of moving sideways. Okay, let's take a look specifically at candle 2, and you can see that we've got this buying tail here. So we're going to put in a support zone here, which I think would be quite sensible. Let's put that in. And what this candle is effectively telling us, and I'm talking about the very last candle. If we just put in a set of axes, okay, we have the open over here. So the open for this red candle is over here. So we'll just put it there. So that's the open. It falls to a low, so it kind of falls down to a low. And at that stage, clearly the bears are selling gold down. What would be the explanation? Well, gold is a safe haven, so if money is rotating out of gold, it's probably heading towards more risk defined type of assets. So one would see this as a risk on move. However, at the low for this week, the bears actually lose control and the bulls take over, and we're kind of over here at the moment. So we'll just have to watch the next 2 days to see if the gold bulls carry on pushing the price of the precious metal up, because if they carry on pushing the price of gold up, so if we kind of get this type of move, that would suggest risk off sentiment. So we're at I think a very interesting part of the gold chart, because it's going to help us determine sentiment to a large degree. Nevertheless, okay, and we've just sort of really put in an emphasis on analyzing this week's candle. Nevertheless, we are in a gold uptrend. So by and large, the longer term investors, the longer term positions are risk off. They are risk off. And if that's the case, there is a very real chance that we get another higher trough. Okay, so I'll put this as question mark because there's a chance, but it's not a definite. So we'll see if this higher trough comes in. I would suggest if it does come in, that's not a great sign. It's not a great sign, because I would think that it would imply an expectation of stagflation. That's what my interpretation is. So we just want to keep an eye on this. Of course, if it moves down, I think then the stagflationary environment is, or chances are diminishing. Another way we can just look at this is keep an eye on the RSI. RSI is above 50. As long as it's above 50, that's on the bullish side of the oscillator. Let's just take a look at a few of the other charts, which I think will help tell the full story. And we'll start off with Brent. So we'll go through to UK oil, which is our CFD for Brent. And you can see that this in itself is it's quite a complex sort of last few weeks. The volatility here is very obvious in terms of shooting up, going overboard, putting back. My concern is, of course, this candle here. This candle here is the lowest low in at least a 3-candle cluster. This is a potential swing low, right? And it was actually confirmed last week. So last week's candle closed above a reference candle's high, and that in itself it locks in the platform of swing low. Now, a swing low is needed. A swing low is needed for a swing. Okay, an upward swing. A swing high would be needed for a downward swing. So this is the last. This arrow is the last active sort of swing point. Where it becomes interesting is over here. So last week's candle is also, if we've got this candle as the lowest low in at least three candles, we've got this candle as the highest high in at least 3 candles, and we could take a look at it in terms of is price going to close below last week's low? Okay, so we just need to watch this very carefully as well, because if this swing high locks in, well, it negates this arrow. We can delete it, negates this swing low. So I think this is now a really important point for us, because let's just assume that we do close lower than last week's low, then we get the chances for a pullback in oil, which is really what we need to avoid stagflation. If we don't get oil coming down, we don't avoid the stagflation. It's still very much on the horizon. And I would also like, if we get the swing high locked in, okay, I'd like to go back to the gold chart, and I'd like to see gold actually breaking below the support. That would take a lot of pressure off of central banks, by the way, because in a stagflationary environment, the problem with stagflation is that it's an economic paradox. It's an abnormal condition. It's not a normal condition. Normal conditions in economics would be inflation and growth, or disinflation and sort of recessionary pressures. Stagflation, we have inflation with recession. It's a paradox. If you guys recall, we have looked at it previously, something called the Phillips Curve. Phillips Curve, if I can remember it, is something like this. So just bear with me. It's not linear, but I'm just going to put in a linear. It's kind of more curved, but you would get inflation, and unemployment. Okay, so look what the implications of this is. The Phillips curve is saying if you get inflationary pressures, well, we would expect a low rate of unemployment. See that? So, and that's sort of your traditional economic paradigm, but that's not what happens with stagflation. With stagflation, the Phillips curve actually shifts. In the extreme case, we'll just say it goes inelastic. So, in other words, you're getting high inflation and high unemployment prices. So that's the danger here, is that the policymakers, the central banks, then have to choose, well, which is the bigger evil? Do we concentrate on fighting inflation, or do we concentrate on fighting unemployment? Okay, you can't do both in a stagflationary environment. You've got to choose one or the other. Either one you choose to focus on, there's going to be a trade-off, and that makes it very, very difficult for policymakers. So we want to see the oil prices come down. We want to see gold prices effectively come down, because I would suggest that gold becomes exceptionally sought after if we move into stagflation. I also want to bring up just wheat. Okay, so wheat is also in an uptrend, right? We've got trough, peak, higher peak. Now it looks like we're getting in the next higher trough. You see here. Let's just do an analysis of this week's candle. It's very much like the gold case, right? You've got a drop down, so wheat's coming down, so the wheat bears pushing price down until the low of the week. Then they lose control and the pressures are on the bullish side. And we want to see, now, this is a very important chart. If it carries on moving in this direction, food prices go up at a time when energy prices are going up. Generally, the raw materials, your cost of production start increasing, and there's the supply shock. So you can see we're still very much in this stagflationary, let me say, we're very much potentially in a stagflationary environment. And that's really, we're going to release our Q2 report, I believe, next week. And that's really what we've written about. Let's go through to DAX to see how DAX is handling this type of uncertainty. So we'll bring up the DAX. And look what's happening here, okay? Take this off, let's take this off. Again, what I want to do is I want to concentrate on this week's candle, okay? So now let's bring in our axes. So now, you're just looking at this week's candle. So it opens up over here. Let's say this is the open, and it shoots up to its high. So we've got a nice bullish push. But at the high of the week, the bulls seem to lose a bit of control. It's not quite as obvious as on the gold or the wheat chart, but we are. So we're going to just put this. So we want to see how we end off for the week. If we move down, I'm very nervous about that. If we move up, I'll be more comfortable. Why am I nervous about this? Because let's just zoom out here. We've got a peak, trough. And this peak is slightly lower. Okay, we're going to have a lower peak. We're going to put this as the lower trough. Okay, and if you're sort of not comfortable sort of with that type of labeling, we can adjust it to this. Okay, which we could do as well. The question is, are we getting this is this a lower peak? See, I've got I'm pretty sure it is a lower peak. Okay, but you know, that's, and I just want to amend that by saying, well, I'm pretty sure, subject to correction, it may shoot up and take out this over here. But the reason I think this is a lower peak, I mean, we've got a really good bounce. The question from here is, do we take out the previous trough, or do we manage to come in with a higher trough, higher peak? Because each one's very different, right? This would be a bullish type of scenario and would suggest this is kind of a good opportunity to look for bargains. If we move this way down, well, this is a bear market rally. If this is a bear market rally, it's going to cause a lot of damage. It's going to cause huge amount of damage because it's tricked market participants into going back into the risk market. So the bear markets don't cause the damage. It's the bear market rallies that cause the damage. And you can see that we've got this. You can see that we've got this resistance here that's starting to manifest. We just need to see how it closes over a week. All right. If there's any questions, please go ahead and type those in. Any questions, go ahead and type those in. Right, just to remind everyone, we're doing that live trade tomorrow, so please join me for that. The time's slightly different because the times have changed, right? All the calendars have been altered by an hour, so just take that into account. All right, guys, we'll end here. Thank you very much for joining me this morning, and I look forward to speaking with you again tomorrow. Thanks very much. Cool, Raj. Looking forward to speaking with you tomorrow. Cheers, guys.